Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about EHang stock, ticker symbol EH. What I want to do first is I want to go into Google and talk about the news surrounding this company that makes flying autonomous electrical vehicles, which looks like this. So firstly, pretty cool. And then I want to go into the earnings report to see how EHang is doing as a business, and then I want to go into the trading charts to see if there's a level or two to buy EHang stock if we want to buy EHang. So now let's get started. So here we are in Google, and here's a 6-month view of EHang's chart here. And as you can see, in about a month, we are up over 200%. So, the real question is, what really caused this frenzy and parabolic phase here that allowed us to run up 200% in a single month, which is a fantastic move. So if we scroll down to the news of what's going on in the stock, not really a lot is going on here as of recently, but if we look at a month ago, everybody was talking about these flying cars that EHang has successfully test flighted. So going back to the most recent news here, there's not really a lot of news coming out of EHang. And this is actually something that I like to see if I'm thinking about investing in a company. The reason for this is because it means that the stock price will likely be more stable without news headlines that would add to the volatility. By eliminating the news factor, we get a better picture of how EHang will do without these headlines to cause excitement in the stock. Of course, there is some news about a week ago about a European firm investing in EHang, but that shouldn't really move the needle at all. So now that we've talked quickly about the news of what's going on around EHang, before we get to the earnings report, I want to pay attention to this $4.05 billion market cap here. So, this is saying that we are saying that EHang is worth $4.05 billion USD. So when we get to the earnings report, we'll see that EHang only makes about 20 million USD annually. So that is a nice price to sales ratio of over 200, which is incredibly expensive for any company. So when we get to the earnings report, I just want you to keep this in the back of your mind and keep asking yourself, why is EHang worth over 200 times price to sales? So here we are in EHang's earnings report, and they give us a nice year-over-year view, with this quarter being the most recent quarter ending on September 30th, 2020. So as always, let's start off with total revenues, which is this line on the earnings report here. And we see that year over year, we are growing at a fantastic 120% year over year. What's even more impressive to me, if we look at the gross profit margins, which allows us to capture this 42 million RMB here, we are actually increasing profit margins from 54% last year to 59% this year. So firstly, this is pretty good margins, which actually made me a little skeptical, to be honest. The reason why I was skeptical was because 60% margins on a vehicle was pretty unheard of. GM, who has been making cars since before I was born, is locking in, if they're lucky, maximum 15 to 20%. So the question is, how is this new company with flying cars, who've only been around for like 6 years, how are they outpacing the legacy automakers in profit margins? So the answer actually comes down when you look at the overall business of EHang. The main story that everybody talks about when they talk about EHang is their flying cars. However, if we look at the actual products that EHang has to offer, a lot of their products involve the use of non-human carrying drones. If I was to hazard a guess, I would suspect that these smaller drones and the services that EHang provides with these smaller drones make up a majority of the sales at the moment. Logistics deals with data, which is a high margin business, and aerial media only really needs one person and a computer to be able to make the show work, so that is also a high margin business. All of those are really high margin businesses, and the real low margins would be coming from the making, selling, and leasing of these personal transport vehicles here. Another thing that I'm noticing in the earnings report is that we are also increasing operating expenses. We see that total operating expenses a year ago was about 30 million RMB, and now it is up to 44 million RMB. What I like to see is that they are increasing their R&D expenses by about 5 million RMB year over year, but they are also increasing the general and administrative costs as well as the sales and marketing expenses. So those increases in general administrative and sales and marketing, I don't really like to see, because I don't think that pushes the technology forward. However, I do like to see the research and development expenses go higher because they are at the edge of technology and they need to spend money and invest money to keep being at the edge of technology here. So again, I want to go back to the question of why is EHang worth 4 billion USD when really we're coming down at a net loss of about 157,000 USD. Again, possible answers to that question is because they are in the flying car business, and because that business may explode in the next couple of years, then EHang would be positioned in a fantastic spot to be able to capture a majority of the market share, so they could grow into the $4 billion market cap very easily. However, on the flip side, we are saying that the company is worth $4 billion, even though we are losing $157,000 right now. So to me, valuation is a concern, and it's really one of the few bad things that I see about EHang at the moment. If you want to invest in EHang for the long term, you have to believe that EHang will grow into its valuation. It could take some time, but EHang really is at the forefront of the technology game right now. So it would be easier for EHang to make up that market cap if the demand is there. Another thing that you have to consider is that while EHang is in the very fun and exciting field of AAVs and drones, this comes with immense regulatory risks. Because you are operating a drone that is flying above the heads of hundreds of thousands of people, the governments of the world are likely to have a strict regulation policy to protect the citizens. And, rightly so. I, for one, would not like a drone dropping on my head. Because of that, as an investor in EHang, you have to be aware that even if EHang develops this amazing technology and does all the safety testing, the government may still ban it from use. This, of course, would hurt revenues, which will likely weigh on the share price. Also, if there are any mishaps or any bad press that could come with the aviation, we could see stock prices fall out of the sky as well. With that being said, there are reports that China does really favor EHang at the moment. So this could be a definite tailwind because the state-sponsored companies tend to do well over time. So now that I've talked about the fundamentals of EHang for a little bit, now let's head on over to the trading charts to see if there's a level or two to buy EHang if we want to buy EHang. So here we are in EHang's trading charts, and as we can see, EHang has really lifted off at the beginning of January here with some massive volatility swings. I mean, these candles here are like 40 to 50% moves. This was definitely the frenzy and parabolic phase, but then we kind of started consolidating after our top here around the $100 level. So, finding support and resistance levels, these two tops, the one at the 90 and the one at the $100 level, are the resistance levels. And the support levels here is made by this candle around the $65 level. Now, we are in the first wave of consolidation, so this support level is actually kind of weak. If we break the support level, then there is a long drop down to where we broke out of around this $30 level here, made by this candle here. We may stop down for a little bit around the mid 40s where these three candles are, but again, that's pretty weak. Because EHang took the hovercraft up the mountain so fast, we don't really have a lot of places where there were strong equilibriums of buyers and sellers, which is why we don't have a lot of strong levels here. So if you do want to buy EHang or maybe swing trade EHang, this $65 level here could be an entrance, but this is a risky spot, like I said, because if we do break this level, then it is look out below. So I would set a quick stop loss if I was trading EHang at around the $60 level here. That way you can minimize your losses if this 65 support level does break. If you want to be long EHang, again, for me, I'm still deciding if I should go long or not because of the evaluation. I think definitely if EHang goes down to the $30 to $40 level, then it's worth considering. However, up here at around $73, I may have to let it go and see what happens. I do think that EHang has the technology and has the state sponsorship to be able to climb higher. However, the passenger vehicle is still in the testing phase here. So for me, it's a little early to jump in at this high of a valuation. Just to cover the other major indicators here, the MACD chart, which is a measure of momentum, just crossed negative. If we zoom in here, we can see that our blue line is just under our orange line here, which means that our short-term momentum, the blue line, is weaker than our long-term momentum, which is the orange line here. And that's just normally a bearish sign. The RSI here, if we look at this chart here, RSI also looks to be trending downwards, but again, I pay more attention to the support and resistance levels because those are actual equilibriums between buyers and sellers. So that was my review on EHang stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.